Welcome back, guys. I just found out something absolutely mind-blowing. If you are like me and you are on edge about money and finances all the bloody time, you don't want to pay that much tax. And if I can avoid it legally, I want to just legitimately, not one of those guys that hides the money in the basement. I want everything to be legit, baby. And I found out a way of taking your income, converting it into something that you don't have to pay tax on, and you can even use it to buy a house, and that is a RRSP. And if you don't know what an RRSP is, it's just a retirement account you can't touch till you're 65. But after talking to my accountant today, I learned something mind-blowing about RRSP. So let's jump right into this. Welcome back to Passive Income Investment. This is a mind-blowing thing that I've just learned, and oh man, I can't believe I didn't know this before. And this is what happens when you're an idiot and you have to ask people. And I ask you guys, but sometimes you guys don't know either. So that's why I'm going to share this with you. You guys have been so helpful with stocks lately, though. If you got any other good companies, realty stocks, anything, just let me know in the comment section below. I love hearing your guys' stock picks because I always find something I didn't even know existed, and I love learning about that stuff. But today we're specifically going to talk about how you're going to be able to use your RRSP to actually buy a house. And what I'm hoping you're going to be able to do is actually be able to buy other things with it. So let me go back a little bit, all right? So a while ago, before I had any real money, I think I had $20,000 in my tax-free savings account, and I went to the bank and I said, would I be able to get a line of credit with what I have in the bank? And they said no. And the reason they said no is because I am self-managing an investment account. Now that I have 100 grand, I haven't asked them. The story might be a little different, but from my understanding, it's really hard to get any kind of line of credit up against. And you want a line of credit because the number, that interest rate is way lower. You can usually get around 3 to 5% interest rate. But on a credit card, you're looking at like 20%, right, which is insane. So I'd really like to get a line of credit, but they said, you know what, at that time, you invest your own money. We don't have control over the accounts. You could do something crazy and just spend that money. We don't know what you do. You're a liability to us, especially because you work for yourself. So I forgot about it. I moved on with life, and then it comes up till today where I'm like, man, I really want to either find a way to spend my money on something, but I don't know anything about taxes. I don't know that much. I'm not an expert. I didn't go to school for it. So I'm like, what could I do with the money that I'm making without wasting it that would produce cash flow, but without me having to give any of it to the government? Damn, that sounds like a big problem. And if you own a house already, good for you, because now you can take that income and put it into fixing it up or problems and just write it off anyway. This is not a big deal to you. Canadian government's really nice to people that own homes already, especially when the equity goes up the way it's been going up. So I got to look at it. So I'm not even going to be able to make enough for a down payment on a house here in Canada. Homes here in Canada are like $500,000, $1 million, and that's crappy homes, guys. Crappy homes. So I mean, I'd have to come up with $150,000 before I could even buy a house. And by the time I come up with that money, I would have already paid the tax on it anyways, because it's going to take me 3 to 5 years to even come up with that much money. So the problem that I'm having is I want to be able to come up with money and put it somewhere where they're just not going to touch it. And I've come up with 2 solutions, and one I'm still learning about, but I'm going to talk right now about this. So I called the accountant, and the accountant told me, look, you're not ever going to be able to take money from your business and immediately buy a house with it. You're still gonna have to pay income tax on that money. But here's what I would suggest you do instead. Because he's like, you can only write off, and this is what I say all the time too, you can only write off so much in your business before you're wasting money. So I've come to 2 ultimate conclusions, but this is the most brilliant thing I've ever heard. He says, you're gonna max your RSP. So what you wanna try and do is max it. I said, why? I'm like, I don't like RSPs. You guys know that. If you don't know what an RSP account is, it's just a registered retirement savings plan account, essentially. So what you're going to do is you're allowed to contribute a certain amount depending on how much you make in income, and you can't touch that income till you're 65. If you do, you get penalized. And I'm like, I might not even be alive till I'm 65. Why do I want to put money in a savings account like this when I want to be able to financially be independent when I'm in my 30s? And this is where reality set in and my mind just got blown. He's like, you can actually take out a mortgage or a line of credit on an RRSP because you have to do it through a bank specifically. And it's also just the fact that it's a retirement plan that you usually are unincentivized to touch to your 65. So he says, what you're going to do is you're going to come up with enough money in a down payment in an RRSP. And then you can just take out a line of credit or a mortgage on it. And believe it or not, you don't even have to start paying that mortgage back. From my understanding, I have to go over this. I'm going to blow this out just to kind of blow it out, and I'm probably wrong. I should be talking about things I don't understand. But apparently, you don't actually have to pay interest on that mortgage back right away. There's actually quite apparently a long time delay, which when I learn more about, I will share it with you guys. But from what I was told, you can actually delay the payments without building up any real interest on it, which is another fascinating thing. So here's my new plan, because I can't just go out and buy a house. I can buy an online business, however. Before I tell you my plan, maybe I should get into that second thing real quick, guys. If you actually take out if you take the money that you make, you can reinvest it into your business, but then what are you buying? A laptop, a car? That all goes down in value over time. You're never going to see that money back. It's kind of, man, if you don't need to spend it, why would you, right? But what you can do is something that I showed you in a past video, which is something like Empire Flippers. If I can find an online business that somehow I can relate either to this business or my magic business directly, or in any way I can try and find a way to interlude it, I can go and spend. So my contribution limit, because you can only put so much in RSP, is something like $12,500. So if I max that and I come up with that $12,000 by the rest of the year, I'm still stuck with 20 grand. If I take that 20 grand, I'll be paying a lot less tax on it now. But what I could do is, if I don't want to pay any taxes, buy one of these online businesses and just use it as an expense vehicle that is already producing income. So now I'm going to buy a business that's making more cash flow for me month over month, and then I'm reconverting that 20 grand into a business where I can not have to pay any HST or income tax on it, which is, I bet I just blew your mind because I blew my own today. Not that sounds dirty, but so back into my plan here. I've been running around my head chopped off, talking to realtors, doing this, doing that, trying to come up with a way. And the realtors don't really know. The tax accountants are more realting accountants that don't understand what I was asking. And I've been running around my head chopped off, and finally sitting down with an accountant that knows what's going on really helped me out and pointing me in a good direction. So my plan here initially is to somewhere, I might not max it this year, but I probably should. I'm going to go sit down and do a meeting first of all next Tuesday. And we're going to find out exactly what I can get away with, what the interest rates are on taking out a mortgage on it, how much do I have to have in there for versus how much I'm going to be able to take out on a mortgage, which I'm going to tell you guys all of that. And if everything makes sense, I'll probably funnel somewhere between $6,000 and $12,000 into my RSP this year. But I want to try and, if I can do it quicker, I'd rather do that and then immediately take out a loan on it. Because who says I need to buy a house? Let's just get this going this year. Next year, you take out a mortgage on it, and I could either reinvest it into dividend stocks, which I'd rather not do, or just try to find another thing to do with that money. Because if I can just use the RSP to hold on to money and then find a way to get a loan on that money, because again, guys, you got to understand the money that you convert into an RSP, you just got to remember the money you convert into an RSP, you don't have to pay tax on, but it's a limited amount. And you do have to pay tax on it when you withdraw it. That's the dilemma, right? You're not allowed to withdraw it until you're in your 60s, but you don't have to pay the initial tax putting it in. So it's kind of a brilliant thing. I can save tens of thousands of dollars year after year by putting it into the RSP and then just using a loan, which I could also use as part of a write-off and put it into another business or an investment vehicle. And I'm saving tons and tons of money. This is a weird problem to have. I wish they taught it in school. And you guys can slap a like because, damn, I'm giving you a lot of good information for free, guys. This is some really cool stuff that I wish more people talked about that they taught in school. And I'm just doing this on my own, and I'm hoping you're learning something incredible from this, because man, oh man, when I sit down and do this meeting, guys, I'm going to bring all that information, that juicy information up to you, which you can garble up and use for yourself, because I hated RSPs. I'm like, forget RSPs. I can't use that money ever. Why would I put money into it? Well, not only to save on tax money, but you can take out a line of credit on it, which, damn, that's interesting. So let me know what you guys think in the comment section. Well, this is an extra video for you today. I hope you enjoyed it. Stay cool, guys. Stay awesome. And let me show you, by finishing this video, one of my marketing campaigns, or something that I'm going to use as a marketing campaign soon. It's not the finished version yet, but it's getting close. Enjoy your afternoon, guys. Ciao.